Today is Monday, June 17th. This is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Alan Bush, ADMIS Senior Financial Economist, and Steve Freed, Vice President of Grain Research at ADM Investor Services. Steve, corn prices are still rallying. Will this continue?
I think some people feel that we're going to pause this week. We rallied overnight. We tested 473 on the D's corn. Funds are now along almost 200,000 contracts, a big turnaround from what they were just a month ago. But it's a wet weather rally, which is hard to guess. I mean, there's talk about farmers not planting as much as 12 million acres. The USDA lowered their yield to 166 in the last report. All those things are bullish. But I think that the pattern's may be changing. On June 25th, the jet stream is going to move north, and so some people think that that could be the end of this particular rally. And then we'll have to see what kind of weather we have in July and August.
And the forecast, is there a forecast for the rest of the weather in the growing region here?
It's going to be wet this week. Much of the Midwest, because we'll see 1 to 4 inches of rain this week. And then the pattern is supposed to change June 25th with the jet moving up, which will give us more normal patterns for the remainder of June and into July.
So Steve, I guess right now we kind of know, how many acres didn't get planted. We're probably close with those numbers. What about yield? How much damage can there be to yield, due to all this rain, even with the corn that has been planted already?
Well, we'll find out today what the government thinks about ratings. Last week it was basically about 59% of the crop was rated good to excellent. Some people think that might drop a little bit this week. So with half the crop good to excellent and half the crop not, the government said, hey, our yield's 166 versus a trend yield of 176. On our farm, planting crop this late, we'll be lucky to get 150 bushel corn versus 230 that we normally get. So it's important now from here on out that the crop gets better. If your ratings go up to 60 to 70% good to excellent over the next few weeks, then tops in. But if we start going back down to 40 or 45%, prices need to go higher. On a December corn continuation chart, there's really not a lot of resistance from 473 to 515. That's an objective of the marketplace if things get worse.
Finally, Steve, wheat and soybean prices following higher corn prices. What's your take on this?
It's not justified. I think right now the funds are still short 100,000 beans and long a little bit of wheat. You have a 1 billion bushel carryout here in the United States. You have a record carryout. You don't have a trade deal with U.S. and China, so the beans are overvalued. In the wheat, we have rallied a little bit on some dryness in Russia and Canada, but those two areas are supposed to get rain. We're worried about some of the crop quality of the U.S. winter wheat and probably see a drop in ratings today, but still there's too much wheat in the world with record supplies. And so these markets are just following corn.
So in regards to the U.S. and China trade situation, we still have the G20 coming up. I guess we should be hopeful that, there's some positive developments in that.
U.S. Commerce Secretary said over the weekend, don't look for anything from that meeting. They hope that the best thing that can come out of the meeting is that they agree to start talking again. But the President of the United States says he has no problem about putting tariffs on the remaining $300 billion of Chinese imports if there's no positive discussion at the meeting.
Alan, let's talk about the financials. Last week, the gold futures market advanced to its highest level in 14 months. Why has gold been so strong in spite of limited global inflation?
Well, that is the big question. Very little inflation anywhere in the world. But oddly enough, last year, central banks bought more gold than they had since 1971. So central banks are very aggressively buying gold, and that has continued into 2019. Of course, we have had some flight to quality buying coming in. So the fact that we're higher on limited news and buying coming from strong hands, to me suggests that further gains are likely for the gold futures market.
The June Empire State Manufacturing Index posted its largest ever decline in the negative territory, plummeting 26.4 points to negative 8.6. Will this be a catalyst for the FOMC to lower its Fed funds rate at its Wednesday policy meeting?
No, it will not be enough for them to actually make the decision to cut rates then. Right now, the probability of a rate cut at this Wednesday's meeting is about 22%, but it adds to a pattern of the U.S. economy apparently slowing and the global economy slowing as well. So this does, though, add to the argument that the Fed should be cutting rates later this year. Probability is that the Fed will be cutting by 25 basis points at the July meeting.
30-year Treasury bond futures market has formed a flag congestion pattern on the charts.
Right.
Which way will prices break out from this chart pattern?
Okay, the rule of thumb is that 60 to 65% of the time that prices will break out of a pattern in the same direction that they came into the pattern, and that would be to the upside. So my guess is that higher prices are likely. Of course, this is in line with my thinking that central banks are cutting rates. Of course, that's a bullish factor. So the technicals and the fundamentals seem to be aligned, suggesting higher prices for the interest rate futures markets, especially the bonds.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.